he had a series of processes in his business that were broken. In effect, garbage was going into a process, garbage was getting processed through the process, and garbage was coming out the end. At best, garbage was coming out the end. Truthfully, it got clogged up in the process. And if you think about a process as a pipe, you'll understand a little bit about what I'm going to cover here today. And I want you to think about your business as I'm talking through this story and this particular process. So, hi, I'm Pam Pryor, and this is the Cash Flow Podcast, where we talk about everything money related in your business. Without further ado, let's jump right in. Welcome to Season 4 of the Cash Flow Podcast. I am so excited about this season because we're going to integrate one of my biggest passions, not dogs. I know that's what you thought I was going to say. But the other one of my biggest passions is cash. No, not well, cash, yes it is. But craft beer. So this segment or this season, we're going to be calling what we do Bucks. Hang on, I got to get it right now. Bucks, News, and Brews. And we're going to do a quick segment on the brew of the week. Which is going to be a craft beer. I'm a member of a club, but I also run to the store a lot, and I grab a fun-looking beer off the shelf. And so we're going to always have a beer every week that I'm going to drink while I'm doing this and talk. Because of course it's easier to talk when you're having a brew, but also it's kind of interesting. I've always wanted to know a little bit more about the brews that I drink. So I'm going to need to research them, and I'm really looking forward to that and sharing it with you and giving you some new ones to try if you're a beer drinker. Then we're also going to, in segment 2, talk about what's new in the world. This is going to be mostly related to finance, geeky stuff, but it's going to be of interest to entrepreneurs. So I'm going to pick topics that are relevant to you as an entrepreneur in the field out there. And then the third segment you're going to recognize from Season 3, which is how we're going to attack or deal with and hopefully steps, very logical steps, a particular problem that you as an entrepreneur are probably dealing with or have dealt with or have coming in the accounting, finance, cash flow, money part of your business. We're really going to get into the meat of it there. The idea of that third segment is to let you walk away with something very actionable you can do to either get your business in a positive cash flow state, or get yourself better information, or grow, or scale, or exit your business. So always finance-related stuff relative to entrepreneurs, both personally as an entrepreneur, but also in your business. So I am really looking forward to rocking Season 4 because it's incorporating two of my favorite things, money and beer. You can't beat that. So this week, our 3 topics, as you know, we're breaking it into 3 segments. That's how we're going to do it now. Our beer is going to be Saison Dupont, which I'll tell you more about shortly. Our news is going to be a little bit about something called stable coins, which you may or may not heard of, but hang on, it's really important to you as an entrepreneur. And the third piece is going to be the buck's tail, as I call it. The buck's tail is about a client of mine and some systems issues they've had, buying software that they're not quite ready for, and how you can prevent that in your business and make sure that any investment you make in software is something you're going to get the most out of once you spend the money. Are now ready to start the very first episode, and we're going to start one of my favorite beers that I've had for a long time. And Drew had for a long time. If my friend Amelia is watching this, she'll know that we stocked her refrigerator with this when I was working as her CFO in the startup that she took from 0 to a whole bunch of millions over a 4-year period. We kept the fridge stocked with this because I did my best thinking on it. But let's see what we got here. We have the right glass for a Saison Dupont, and I'll talk to you a little bit about what it's about. But first, we're going to try and do the perfect pour, which we will attempt every week. So let's get going here. And indeed, we're getting there. And, oh boy, I wouldn't call that the perfect pour, but it's not bad, and it gives you a real sense of this beer. So let's talk about where this is made. This was originated in a farm that was actually first started in 17, I got to put my glasses on for this one now. 17, I didn't write the years down, mid 1700s. But I do know that in 1844 is when they started brewing this beer. And it's called Saison, and it's actually a whole genre of beers, but it's called Saison because it was brewed in the winter to be drunk in the summer by the seasonal farm workers. So that's why it's called Saison. My daughter would help me with the pronunciation. She's a great French speaker. But I'll go with Saison, Saison Dupont. And it was essentially, it's called a Belgian farmhouse ale because it was brewed on the farm for the seasonal workers. And I can think that I might have enjoyed being a seasonal worker because it's got a great taste. What do I love about this? So let me give you a few facts and figures, and then I'll tell you what I like. Facts and figures, it's a 6.5% ABV, which is the alcohol content. So 6.5%. That's high range for most beers. It's up towards the IPA level. I'm actually an IPA lover, so that doesn't surprise me. And it's a blonde ale, and its fragrance, yeah, I can confirm that's right. It is. It's grapefruit and clove, which I really like as a beer drinker. You'll come to learn that that's something I enjoy, is that citrusy but not too citrusy, sweet tasting thing. And initially there's a really bitter bite to it when you take a sip, but it ends really, smooth isn't the right word, but it ends perfectly without too much sweetness, and it kind of stays there as a little bit of a bitter with a nice kind of smooth ending, and it's not sweet. Since I'm an IPA girl, I really like the bite. The other thing I love about this is it's really fizzy. It's like a soda water. If you have a soda stream, you'll know that if you push that thing 5 or 6 times, you get a really sparkly soda water. This is a really sparkly soda-y beer, which I love because the cold and the crisp of that really makes a difference for me, and I just love it. So officially, though, they say that the taste has indeed an initial bitter taste, but it rounds off nicely. How's that? Without any sweetness. And that's exactly what it does. I think if you like a citrusy beer that's not too sweet or citrusy, and you like fresh and crisp, you might want to give this a try. Again, it is Saison Dupont. What's really ironic about this beer is the Dupont in it. And the Dupont is funny because if you know my story, you know that I worked for Dupont and Dupont Merck for 30 years of my career. But what you don't know is that for all the years before that, I started working there when I was 17, but for all the years before that, my father had worked for Dupont. And he had died when I was young, totally irrelevant to this story, but they took really good care of us until I was old enough to work. And what I realized when I left Dupont, it was actually Dupont Merck at the time, I was 40 years old, and the very first meal I ever had that wasn't paid for by Dupont happened after I was 40 years old. So literally, Dupont took care of me from the time I was born until I was 40 years old. So I feel a little bit of a connection to this one, and I'm really glad it tastes good because it would suck if it didn't. So without further ado, that's the brew of the week. I hope you enjoyed the review. Cheers. Now jumping into the What's News section. Now, I mentioned at the beginning of the podcast here, at the top of the day here, that we're going to talk about stable coins. One of the reasons I want to talk about stable coins is you probably noticed that Bitcoin's been back in the news. And it's been back in the news because it's higher priced than ever. And you know of Bitcoin as this thing, this sort of digital money. I think everybody who's listening to this podcast has certainly heard about Bitcoin. And just for some perspective, Bitcoin has been as low as about $16,000 per Bitcoin recently. It's been as low as pennies per Bitcoin, but that's going way, way, way back. And right now it's hovering at about $52,000 per Bitcoin. And truthfully, since the beginning of last year, the beginning of 2023, let's call it March of 2023, to now, this price has increased by 280%. So Bitcoin is that thing you know that's out there that, gosh, you're thinking a little bit of FOMO, should I be in it, should I not be in it? boy, it would be nice to ride it when it's high, but God, it always seems to be having news about crashing. And quite frankly, the actual news media that we watch today doesn't know shit about Bitcoin, about cryptocurrency, or about anything that it represents. So it's very confusing because they'll tell you about it when it's going great. And a lot of people heard that in 2016 and started to invest, and then it crashed. But they don't talk about it when it's not making big price moves, which is exactly the time that you might want to invest. Not that this is investment advice. In fact, this is categorically not investment advice. I'm just talking about the fact that Bitcoin has hit the news again, not the price, although the price is interesting. And we'll save that for another show because there are ways to invest in these kind of things that really minimize risk but still let you take advantage of that upside that can happen. But again, we're not an investment show, so I'm not going to dive into that here. However, one of the things that's helping Bitcoin is that there's this thing called a stable coin that exists. And there are a few of them, but specifically on the Coinbase exchange, which is where you can go in and buy and sell crypto for US dollars, there is a stable coin that's called USDC. Now, there are others. There's Tether, which is TUSD, and all sorts of others. But let's just talk about the one that's sitting there on Bitcoin, and it's called, or on Coinbase, rather, and it's called USDC. And it's literally pegged to the price of the dollar. So what you'll see is its price is always going to be somewhere in the range of, 0.9999999 cents and $1.00000000001. So it's going to always be worth about $1. And it's physically pegged to that dollar, so they can only sell as many or put as many in circulation as there exist actual dollars that are available to support that coin. Why is that important? So I was working with a client actually over the last 8 weeks or so, something that I would have thought would have been 2 weeks. And it was to get all of their banking moved from one bank to another bank. Now, what's important to understand is this particular client has probably 18 to 20 entities in it, in a very complex web of businesses that are set up very wisely for tax management, business management, ownership management, that kind of thing. And we thought, oh, this will be easy. We'll open up 20 new accounts in this bank that are representative of these 20 entities. Well, it's been more than 8 weeks, actually. It's been probably a 4-month slog to get this done. And we're having to go through, I just wrote down some of the things we're having to deal with. And we're having to deal with, let me just get the list here. Documentation of ownership, documentation of what percentage each thing owns of the other thing, what order the signatures need to be signed on the documentation, what's the physical business address. Oh, by the way, that can't be a P.O. box. That can't be a shared office space. What's the mailing address of the entity? Literally for every one of these entities, it's been like pulling teeth to get everything updated to be exactly right, to be able to do nothing more than open a new bank account at one of the big banks. I won't even use the names of where we're going from and to. I was going to, but I won't. Because truthfully, it would happen in any big bank, right? If you're going to do serious business in any big bank, their business banking is very restricted because of a number of regulations, frankly. One of them is called KYC, which is Know Your Customers. So they have to do a lot of things to make sure that they're actually dealing with the owner of the account. So if you have a business where you have people doing things for you, unfortunately, they can't do it for you. You literally have to be the one that gets in there and signs 20 documents, and they use your social security number and all sorts of stuff like that. And then, after going through all that, we get the beautiful privilege of being able to wire money or ACH money out of the account for a fee of, say, $30 to wire money, or a percentage of the total amount that we're wiring. And on top of that lovely fee, they're adding a time lag. It might take 6 to 7 days to get that physically to show up in somebody else's bank account based on various criteria. Sometimes it can be in a day, maybe 2 days, but usually it's going to take 3, 4, 5, 6 days to get that money to move. So let me just recap that for you. It takes forever to set things up. It takes forever to change anything. It costs you a lot of money to move money in and out of that account. And there are long delays in getting money to move in and out of that account. What does this have to do with Bitcoin and stablecoin? Well, what cryptocurrency, and in this particular case, I'm talking about the Coinbase exchange, these have now started getting the attention of traditional finance people. One of the things you've probably heard about is the Bitcoin ETF. Doesn't matter what that is. It's just important for you to know that companies like Fidelity and BlackRock and other big banking and investing institutions that take care of people's 401ks for the Fortune 50 are now starting to invest in this thing called Bitcoin. And it's the first hints of their belief and understanding of this DeFi, crypto, Web3 world being something that may work in businesses today. And let me give you an example of something very specific to you that could make a difference. Let's just say that you have $100,000 that you need to transfer to somebody else, some other business. So right now, you have to have a bank account that's verified that you're you, that you've been through all the hassles with, that you've made these size transactions with before. You probably have to explain, if you're going to wire this much money, to them why you are wiring the money. And you may just want to be doing a partnership or an investment in a real estate company or something like that. And then in addition to that, you have to wait for the money to get there. Today, I'm going to give you an example of what you could do in the DeFi crypto world. You could literally open a Coinbase wallet today, put $100,000 of cash in it, buy this stable coin. Use the $100,000 of US dollars to buy $100,000 of this US stable coin, USDC. Then you can say, hey, send this to that wallet. It will go, I won't say instantly, but maybe a minute or two it'll take it to go. At the most 10 minutes on a very bad day. It will leave your account and it will go to their wallet, which is a crypto term. They can then take it and deposit it to their bank account, just like that. So without ever having to open a bunch of crazy bank accounts, you can literally transfer money from your bank into, we'll call it a Coinbase wallet for now, because that's the only example I'm going to use to keep it simple. Buy this USDC, hit a transfer button, it ends up in their wallet, whoever you're sending it to, and they can download it. So what's happened is, and the reason Bitcoin's going up in addition to this whole Bitcoin ETF thing, is that the real traditional finance folks are starting to realize this could be a thing. This could be a thing that makes business transactions a lot easier over time. And you don't have to be investing in this Bitcoin asset that's going to go up and down and up and down. You can actually invest in something like a stable coin that you can rely on, that if you put $100,000 in there, it'll be worth $100,000 tomorrow. And again, this isn't investment advice. This is just me giving you a very forward-thinking thought as an entrepreneur to not necessarily scoff at this whole DeFi thing, but kind of think about it a little bit. There are very complicated ways to do decentralized finance, but there are very easy, simple, short steps to do some basic transactions that we as business owners sometimes need to do. And by the way, the fee for making that kind of a transfer might be a few bucks, as opposed to some percentage of $100,000 just to move the money. I know we're all very frustrated with those 2.9 or 3.4% fees that the third-party payers take away from us. Absolutely true. Good reason to be frustrated, except I have a whole video on why. Don't sweat that. It's pretty good to pay those because you don't have to deal with all the hassles of moving money back and forth. But now there's a really cool alternative. So keep your ears open. Don't necessarily just scoff at Bitcoin or crypto as a thing that just happens with the crazy young kids. And think of it maybe as a tool. I actually have some very traditional finance people as customers right now that I'm starting to broach this subject with. I don't want to think I've gone to the dark side, but I have gone to the fact that I'm a very traditional, conservative finance person who is recognizing the value that's being built out on this Web3 distributed chain, and I'm going to keep y'all posted on it, whether you like it or not, because there's some real value there. Hope that helped you. If you're having trouble getting money moving in the speed, the pace, and the cost that you want it to move, this may be something to consider. And I forgot to sip this during the news segment, but I'm going to sip it now. The Tale of the Bucks segment. This is where we're going to talk about things that you can do. This is the meat of the podcast to really change up what's happening in your business and taking advantage of the right things and avoiding the wrong things. If you remember, I often talk about the chutes and ladders game, and my job is to get you to the bottom of the ladders and stay away from the top of those chutes. And if you don't know what chutes and ladders is, look it up on the internet. Very cool game. If you're Canadian, I believe you called it snakes and ladders. Okay, that works. But anyway, our job here is to get you the shortcuts to financial success in your business. And today I want to talk about John and my work with John, but I need you to know that this is not the first time we've had this issue come up. Still crisp, still cold. The thing I really want to hit on today is John in this particular case was very frustrated, and you may be able to relate to this, with the fact that he couldn't get good numbers out of his business. He couldn't make decisions like, how many people can I hire? When can I hire them? How much can I spend on marketing? Am I making money? Why is my bank balance not equaling my net income? He was really frustrated about some of that stuff, and he hired us to help him with it, which is great. But before we actually got started with him, he said, you know what? I need to set some systems up to make this stuff work. Now let's take a pause for a minute, because what happened was he had a series of processes in his business that were broken. In effect, garbage was going into a process, garbage was getting processed through the process, and garbage was coming out the end. At best, garbage was coming out the end. Truthfully, it got clogged up in the process. And if you think about a process as a pipe, you'll understand a little bit about what I'm going to cover here today. And I want you to think about your business as I'm talking through this story and this particular process. So in John's case, he runs a service shop, and they service cars. And the guys in the shop currently scribble down on a piece of paper, here's what I think I'm going to do on this car. And then they run into the shop and they go grab all the things they're going to need to work on it with, and they hand scribble down on the piece of paper all the stuff they grabbed. And they may or may not put the right name down. They may say exactly what the item is, or they might just say, big bolt, as opposed to, this kind of bolt with this measurement on it. So as the document of record for the work that was being done on the car, they literally had a scrap of paper with a guy's scribble on it and some, oil stains and a little bit of black grease on it. And that piece of paper, when the job was done, got put in somebody's inbox in accounting. Now, what happened then is in accounting, they had to figure out what the heck that meant. What did we do, right? Did we fixed a car? What car did we fix? What did we use to fix it, and how much did it cost us? How much time did he spend on it? All of the things that are so critical to that business owner. When John was not able to figure out his finances, the reason was that he didn't know how much it cost him to work on this particular car. So what he said was, hey, I'm going to put a system in place and everything will be better. And he put the system in place, and here's what happened. Instead of using the system, they used it, they logged in, they put some stuff in it, but they still scribbled stuff on a piece of paper for their own record keeping, because that's how they knew what to go pick up from the shop. And they put a little bit in the system and left a little bit on the piece of paper. And nobody really talked about what happened to the data once it was in the system. They just got it in there, sort of. So guess what happened? They spent a lot for this software. I'm not going to name the software because the software is not at fault here. Neither is John. Neither are the people that worked there. But they spent a lot for this software. They put it in place. They started using it, and I use that term very loosely, and nothing changed, right? Because here's what happened. They just automated getting garbage in, processing garbage through, and having it not come out the other end. So accounting still had to go back, and now they had to both get the piece of paper from the service guy. They had to also figure out what data in the system was good and what data wasn't good, and hand cobble together something that represented accounting so that they could tell John, here's how the business did. And John was still frustrated, needless to say, because nothing got fixed. And here's what happened. We took a really good system and we dropped it right on top of a broken process and said, do what we're doing today. And that didn't work. Now, the great news is that had all started before I got there. But now that we're there, we said, okay, we don't know, John, that this is the right project or the right system or not. That's not the point. That's not where we start. When we have a frustration with data and we think it needs some sort of a software or automation, we don't start with, let's just buy the thing and plug it in. We actually have to go through a 3-step process, which is what I want to really talk to you all about. And this actually may be part 1 of a series about buying and implementing software because it's so important. We want to automate. We want to automate as much as we can automate because, not because it eliminates people, but it raises people in the business to be able to do higher order activities, right? It lets them, instead of data grinding, it lets them analyze data. Instead of handwriting stuff and going to grab it, it lets them scan it and pop it on the car, whatever the thing might be. But the whole point about systems is to make things better, faster, and smoother so that we can enrich the jobs of the people who actually are dealing with all of the data and information. And an important thing to remember here is that when you're buying software, the whole point of software, need a sip for this, still good. The whole point of software is to represent or create data that represents the story of what's actually happening in your business, okay? So we know your business has activities. They make sales, they do marketing, they make sales, people bring their cars in, we fix the cars, we give them their cars back, we collect money, we move on to the next guy. That's the story of this business. It's literally that simple. What the software systems do and what the accountants are trying to do or the bookkeepers are trying to do is create things that tell you what actually happened so that you can use them to predict what's going to happen in the future and manage crazy things like hiring decisions, cash flow decisions, and all of those key points that a real entrepreneur wants to get underneath. So when we think of it this way, as opposed to just something you can just put in place, you know that the issue is not the system or the lack of the system today. The issue is the process. So our 1, 2, 3 steps here, or our 3 steps to really make sure you're doing the right software choice for the business, we're going to start with, number 1, what is the information that you as the business owner are really trying to get at? Fancy word for this is user requirements, okay? Throughout your business, there are things your business has to have in order to operate. Your service people have to know what job they're working on. Your parts people need to know what parts to order. Your engineer needs to know how to fix things and be able to design it. You as the business owner need to know what it's costing you to do everything, how much the people and the parts are costing you, and how much you're charging the customer and how quickly they're paying. So there's this list of things that you need to know to run your business. You already know what they are. Every entrepreneur I've met knows this stuff in their head. They could scribble it on the back of the napkin and be pretty darn close to what's actually happening. But as they grow, that's going to be impossible. As they get further and further away from the day-to-day, that's going to be impossible. So the system is there to bridge that gap between when he was the guy that was actually fixing the car and now he's the guy that owns the business fixing hundreds of cars. That's what your software is trying to do, is bridge that gap. So we need it to make sense to that owner. And that's where these user requirements come from. But really, that's just a fancy term for what do you need to know about your business. So take the time to just write that down. If you're frustrated with your financials right now, if there are things you don't know, write down what those things are. That list may look like something that sounds like, I don't know how much I should be paying my people. I don't know whether I can hire another person or not. I don't know if I could get better prices for the parts I'm using. I don't know if the consultant that I hired is the right rate or the right fit for this particular role. Write down what those questions are for you. As you're making decisions on what you're going to do tomorrow, what you're going to do next month, what you're going to do next year, what do you need to know? That becomes something called user requirements. Once you have that, that's your first step. That's your thing number one to do. So number two is, now that you've defined those user requirements, I need to know profitability, let's say. What we need to do is take each one of those and break them down into what data makes those up, right? Profitability. What makes up profitability? Price and cost. Just write it down. What I charge people and what I get charged for each part and each hour of labor. Another example is cash availability. That's really important. One of your user requirements might be, when is my cash available for me? So what do we need to know in order to tear that one apart? We need to know, when does cash come in? When does cash go out? Pretty simple. Another one that you probably need to know is forecasting. That would be a pretty basic user requirement coming out of step one. What do you need to know for forecasting? Well, I want to know when we can grow and when we can be, how we can get to be more profitable even. So you're going to take each one of those user requirements from step one, and in step two, you're going to say, where does the data come from? Okay, or what makes up those components, not where does it come from. Where does it come from steps into step three. Once we've identified those pieces, so for example, we know for profitability, we need to know our price and we need to know the cost of everything we're spending on, right? Once we know that, what's the source of that data? Number three is, you're going to write down the original source of that data. So for example, for profitability, we've said we need to know how much things cost. What's the source for that data? The source for that data is the parts guy who does the initial transaction that orders the stuff. He knows how much he needs to have in stock. He knows how long it takes to get it. He knows who he's going to order it from. He knows what the price list is. Those are all the components that are important to know. The reason I say what is the source is, now you know that the parts guy in this particular example is the guy you want inputting that information in whatever system you buy. Okay? There's a word for this, or a term for this, and it's called pushing the source of the data to the source of the transaction. You don't want to put information into a software system that you're going to have to correct and then correct again and then correct again, or add things to. You want to get all the information you might need throughout the whole system, all the way down to when it's going to be reported to John, the owner, telling him about the profitability of his projects. You want to know and put it into the system, whatever system you buy, only once. Okay? So for each one of those things you broke down in the second question, where is the data first known and executed, is the best way to put it. Another example of this, just to wrap it up with profitability here. Profitability involves knowing how much you're making and how much you're spending. Well, we've just talked about the spending piece. Well, how about the how much you're making piece? So where's the very first time that the customer is quoted a price on this job? Do you create an estimate for the customer? Well, let's get every single piece of information that could be relevant on the estimate for that customer. What parts are we going to need? How long is it going to take? How much labor are we going to need? What are we going to charge him? If you put that on the estimate in the very beginning, it will flow all the way through the system and you won't ever have to touch it again. It'll create an invoice that'll have all the right information on it. It'll create all the right cost information so that you can look at that job and say, I charged this much for it. I spent this much on it. This was my profit. So let me just go through those again to make it a little clearer. Number one, what's the information you need to know as the business owner to run your business? What are your KPIs, your key performance indicators, the things you can control, right? Identify those. Examples are profitability, cash availability, and your capacity to grow. Let's say those are the things you need to know as the business owner. Then you take those three things and you break them down into, what are the key data points that make up that information? So profitability is made up of price minus cost. That easy. Sounds a lot fancier than it is, right? So I know that profitability is price and cost and how many of the things I need to buy or sell. What about cash availability? That's when does cash go in? When does cash come out? So that's what you want to do for the second piece of this. The third tier of this is for each of those things that you've identified in step 2, where's the very first point in my process that I get good and complete information about that. And let's get that into the system at that point. Okay? This is all sort of step 1 to before you ever buy any software that's going to automate processes that you currently have in your business. It becomes much more important if you're a 7-figure business getting ready to expand to an 8-figure business, or a 6-figure business getting ready to expand to a 7-figure business. It might not be quite as important for your first CRM that you get, but I would argue that this process would be a great one to go through, whether or not you're buying your first CRM or you're buying a complete enterprise resource planning system for an 8-figure or 9-figure business. Go through this exercise. If you go through this exercise, you'll avoid wasting money on putting a system in place that literally is going to replicate, only faster, how broken your current processes might be. So that's the tip of the day. Don't take a great system and great people and lay them down on top of a broken process, because it will in turn break both of those investments for you. Have a great day, and we'll see you next week. Cheers. Try Dupont Saison. I hope that video was helpful, and I hope you subscribe to my channel for more information on finances in your business.